AS28 Impairment of Assets. This standard can be studied in 10 points. 1. Meaning of impairment. Applicability of our accounting standard to various assets. Applicability. How do we know about impairment of asset? What is the effect of impairment loss on depreciation and amortization? Recognition of impairment loss. Recognition of impairment loss in the case of the discontinuing operations. A reversal of impairment loss. Reversal of impairment loss in the case of the goodwill. Transitional provisions. Announcement of ICAI on applicability to small and medium enterprises. AS28 Impairment of Assets can be studied in 10 points. 1. What is the meaning of impairment of assets? For what type of assets AS28 is applicable? How do we know about the impairment of assets or losing of assets value? How to find is contained in point number 3. Whether this impairment loss having any effect on depreciation or amortization. Point 4. Point number 5. How to recognize impairment loss. Recognition of impairment loss. Point 6. Recognition of impairment loss in the case of the discontinuing operations. What is the meaning of the discontinuing operations? Will be covered by AS24. So read our AS28 with AS24. Reversal of impairment loss. So far we recognize impairment loss. Asset value has been reduced because asset is losing its value, impairment. After some time, if the asset value is increasing, how to reverse impairment loss previously recognized is contained in 7th point, reversal of impairment loss. What special point shall be applied for reversal of impairment loss? In the case of goodwill, meaning is one concept shall be applied for all other assets, different concept shall be applied for goodwill for reversal of impairment loss. Transitional provision means so far we have not adopted AS28. This is the first time we are applying AS28 impairment of assets. How to give accounting effect? Transitional provision. First time we are adopting AS28. How to give effect? First time. Transitional provisions. Point 10. announcement of ICI on applicability of AS28 to small and medium enterprises. What is the meaning of impairment of asset? Impairment of asset means asset losing its value, weakening the value of the asset. Impairment of assets, losing value of asset is impairment of assets. How to find that? If recoverable value is less than carrying amount. In our local language, carrying amount means book value. Recoverable value means what amount you can recover from that asset. If the recoverable value of the asset is less than carrying amount, means recoverable value is less than the book value. Carrying amount means book value. No doubt, our asset losing its value, we have to recognize impairment loss. For that we have one formula. Impairment loss is equal to carrying amount minus recoverable value. Example, book value or carrying amount. In the books, asset value is 25 lakh. That asset we are getting the benefit from that asset. Recoverable value from that asset, use of that asset to our organization is suppose only 2 lakh, 20 lakh. Carrying amount, book value 25 lakh. Recoverable value only 20 lakh. So loss, impairment loss of the asset is 5 lakh. First you should know what is the meaning of carrying amount. Carrying amount means book value. How to find book value? Cost of asset less accumulated depreciation or accumulated amortization, then balance amount is carrying amount. Balance amount is book value. What value continuing in the books is nothing but carrying amount. And how to find recoverable value? Recoverable value means whichever is higher of the following two items: net sale price, or value in use, whichever is higher is recoverable value. Net sale price means expected sale price. Expected sale price by selling of that asset. From that, deduct expected incidental expenses for sale of this asset. Nothing but cost of disposal of this asset shall be deducted. Balance amount is nothing but net sale price. Meaning is, suppose this asset can be sold for 23 lakh. Expected sale disposal cost say 4 lakh. So net sale price is 19 lakh. Net sale price of this asset is 19 lakh. Now, what is the meaning of value in use? Value in use, nothing but present value. What present value of one net cash flow generating in future will be converted into present value. Net cash flow of the asset plus expected residual value after use, after completion of the life of the asset, residual value. Both the amounts shall be converted into present value by applying appropriate rate of discount. What is the net cash flow? Suppose by using one particular asset, we are producing goods, we are selling those goods. This asset will be, say, machinery will be useful to our organization for next 5 years. Asset life is next 5 years. By using of that asset, we are producing goods in next 5 years. We are selling those goods in the open market. So, inflow of cash will be for next 5 years. Next 5 years. 1, 2, 3, 4, 5. Next 5 years, inflow of the cash will be by selling of the goods produced by using of this asset. From that sale price of the goods, cash outflow shall be deducted. Outflow of the cash shall be deducted. Outflow of the cash means to producing of the goods, we are going to incur material cost, labor cost, overhead, other expenses. For that definitely we have to pay some cash. So, by using of that machinery, we are producing goods. Those goods will be sold out in the next 5 years. We are receiving the cash, means cash inflow. To produce these goods, we have to pay, we have to meet some expenses. For that we have to pay cash. Balance is net cash flow. This net cash flow of 5 years shall be converted into the present value by applying appropriate rate of discount. This is net cash flow, item number 1. After use, asset losing its value, it is going to be retired. In that retiring condition, if that asset is sold out, how much amount it will be fetched after end of the life is expected residual value. That amount shall also be converted into the present value. So, two items, net cash flow of the various years and expected residual value, both shall be converted into present value. That amount is technically called value in use. Suppose this value in use is 20 lakh. In our example, net sale price of the asset is 19 lakh. Value in use is 20 lakh. Whichever is higher is 20 lakh. So, whichever is higher, net sale price, value in use, whichever is higher is recoverable value. In our example, it is 20 lakh. Carrying amount 25 lakh, recoverable value 20 lakh. balance 5 lakh is impairment loss. This is the meaning of impairment loss. Second point, applicability of accounting standard. This is dividing into two parts. Applicability of accounting standard to various assets. Applicable to various assets. Dividing into two parts. Applicability, not applicability. This 28 is applicable to 1. Fixed assets, 2. Intangible assets. 28 is not applicable to the following assets. 1. Inventory covered under AS 2. Construction contracts covered under AS 7. Financial instruments covered under AS 13, 30, 31, 32. Deferred tax asset covered under AS 22. And debtors. For these assets, AS 28 is not applicable. What kind of the entities will be covered under AS 28? 28 is applicable to all types of entities. Level 1 entities, level 2 entities, level 3 entities, all 3 type of entities covered under AS 28. Third point, how do we know about impairment of assets? At each balance sheet date, organization management has to assess the indicators. These indicators are dividing into two types: external indicators, internal indicators. Internal indicators are physical damage of asset. If asset is physically damaged, no doubt that asset is losing its value, we have to recognize impairment loss. Physical damage internally. Obsolescence of technology. If the technology of the asset has been recently changed, this kind of the old asset we cannot use further. Indirectly, that asset is losing its value. Changes in methods of production or services. These are the points shall be verified internally, shall be assessed internally to find any impairment of the or loss of the assets of. Externally, changes in the market conditions or technological conditions are legal conditions. Second one, increase in rate of interest in the market. Third one, change in taste or interest of the public in using of the products by produced by using of our assets. By analysis of these internal and external indicators, analyzing of these internal and external indicators, we can decide whether any asset losing its value now. Fourth point, what is the effect of impairment loss on depreciation or amortization? Your question is whether impairment loss having any impact on depreciation or amortization. Yes, definitely impairment loss having some impact on depreciation. Suppose one asset, machinery, cost is 10 lakh, life is 10 years. Each year we have to provide depreciation. Depreciation is equal to 10 lakh divided by 10 years is equal to each year we have to provide depreciation 1 lakh. If no impairment loss. Suppose our asset having any impairment, machinery value is 10 lakh, any impairment loss is 3 lakh, balance amount is only 7 lakh. This 7 lakh is subject to depreciation over the span of 10 years life. Then each year depreciation is 7 lakh minus divided by 10 years life. Each year 70,000 depreciation shall be provided instead of providing 1 lakh. So impairment loss also having impact on depreciation amount or amortization amount of each year. Point number 5, recognition of impairment loss. For recognition of the impairment loss, assets are dividing into two types. One is individual assets, two is assets belongs to CGU. Two types, individual assets or assets belongs to CGU. Individual asset, suppose any asset is recorded at historical cost, or if any asset is recorded at revalued price. Example, if one machinery originally purchased for 10 lakh, that machinery already recorded in the books at historical cost of rupees 10 lakh, cost of asset is 10 lakh. From this machinery, if we have identified any impairment loss, that impairment loss shall be deducted from this historical cost. Suppose 2 lakh impairment loss, historical cost is 10 lakh, impairment loss is 2 lakh, balance amount is 8 lakh. balance, revised balance in the balance sheet 8 lakh. This impairment loss 2 lakh shall be transferred to the profit and loss account. Entry will be impairment loss account to debtor to asset 2 lakh, profit and loss account to debtor to impairment loss 2 lakh. When asset is recorded at historical cost, impairment loss shall be deducted from the historical cost. That loss shall be transferred to the profit and loss account. Suppose any individual asset is recorded in the books at a revalued price. Suppose some asset is revalued either upward or downward. Example, original historical cost of the asset is 10 lakh. After some time, this asset has been revalued upward. So asset has been increased by say 5 lakh. Revaluation upward 10 lakh. Now book value continuing 15 lakh is not historical cost. It is revalued price. Now if this asset is losing its value, we have to recognize impairment loss. That impairment loss shall be reduced from revalued price 15 lakh, not from 10 lakh. Less impairment loss. Suppose we have lost 3 lakh. 3 lakh impairment loss shall be deducted from revalued figure of 15 lakh. Now onwards, carrying amount would be after impairment loss 12 lakh. This impairment loss 3 lakh, first we have to adjust from revaluation reserve, if any. If no revaluation reserve, excess impairment loss shall be transferred to profit and loss account. Impairment loss past, we have to adjust from revaluation reserve, if any. If no revaluation reserve, or even though we have revaluation reserve, that reserve is not sufficient to completely adjust the impairment loss, that excess impairment loss shall be transferred to profit and loss account. Entry will be impairment loss account to debtor to asset. Later this impairment loss first shall be adjusted to the revaluation reserve. Revaluation reserve account to debit. If sufficient revaluation reserve is not there, then we can book to profit and loss account. Entry would be revaluation reserve account to debit, profit and loss account to debit to impairment loss. This story is about impairment loss of individual asset. Second concept is impairment loss belongs to asset of CGU. What is the meaning of the CGU? CGU means sometimes individual asset cannot generate cash flow on its own. That asset can generate cash flow along with a group of assets. That group is technically called CGU, cash generating unit. Group of assets which can generate cash as a group, which cannot generate cash on its own. That group assets, that kind of assets shall be grouped. Smallest group is technically called cash generating unit. In our example, we have one machine. This is a sugar candy machine. Only one sugar candy machine can produce some sweet sugar candy. That sugar candy you can sell in the open market. Meaning is,